Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 28th. My name is Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. First, let's start with, remember we talked about late in the early morning that we were getting late in the evening some economic data points out of China and Japan, which would have happened basically overnight after 7 o'clock Eastern. So let's take a look at those. Japanese preliminary industrial production came in at negative 3.7%, expected to be a negative 2.5%. So a miss there. Their retail sales also came in at 0.6%, expected to be a 1.4%. So missing there. Then we move over to China, where we were looking at their manufacturing PMI. That came in at 49.2, expected to be 49.5. Remember, anything under 50 is contraction in the economy, and the manufacturing sector of China is a major driver of their economy. Then we get the non-manufacturing PMI, which is basically service sector, came in line with expectations at 54.3. Now let's talk about today's economic data here in the United States. Oh, one other thing. Today's economic data. We did also get Japanese housing starts came in at 1.1%, expected to be 10.4%. That is a big jump from what we even saw last month, which came in at 2.1%. So I don't know why they were expecting such a big number there. It almost seems to me that that number is a typo on the 10.4, but I'd have to dig into that pretty deep to figure that out. And I'm probably not going to do that. Not today. I don't think it's that big of a number. Anyway, then we move across the pond. They've got a couple of consumer spending numbers out of France. We got 1.2%, expected to be 1.1%. No revisions to the number before that. We also got French CPI coming in at unchanged, even, expected to be a positive 0.4%. They did revise last month's number up, though. Originally put in at negative 0.5%, came in at negative 0.4%, so slightly better than expected there, and not enough to make up for the miss on the headline number. And then French preliminary GDP in line with expectations at 0.3%. Now let's talk about here in the getting a little ahead of myself. We did get a flash estimate out of Spain, and the Spanish flash CPI, Consumer Price Index, came in at 1.1%, in line with expectations. All right, now talk about the United States. We have Fed governors speaking throughout the day. Clarida, or I think is the name, and Powell is the other one later on today. Clarida already spoke, I believe. And then we also got advanced GDP here in the United States, came in at 2.6%, expected to be 2.2%. Last month's number revised down from 3.5% to 3.4%, so not much of a revision there. Advanced GDP prices came in line with expectations at 1.8%. And here in the United States, unemployment claims, we got 225,000, in line with expectations at 225,000. Chicago PMI came in at 64.7, expected to be 57.3. Remember, some of these PMI numbers and purchasing managers numbers have been missing. This Chicago PMI Purchasing Managers Index came in higher than expected, which is a very good thing, especially with some of the other data points we've been seeing. It's been a bit of a mixed bag. It's kind of hard to tell which who's doing well and who's really not at this point. It's kind of all over the place. And then we get natural gas storages in about a half an hour. So not quite ready for that. That come in at about, actually, we should have those numbers out right now. Let me look at it real quick, see if we got them. Drawdown of 166 billion cubic feet, expected to be a drawdown of 172 billion cubic feet. So less of a drawdown than expected. Should be bullish for nat gas. Maybe not incredibly bullish, but bullish nonetheless. And like I said, we got Powell speaking later on today and some manufacturing numbers coming out of Japan that you guys will have to take a look at because that is well after the close, couple hours, 6:30 Eastern. All right, talking about the overall equities and the markets, we've got crude oil here, the futures and crude oil moving higher today. Remember, we had that huge crude oil number yesterday that missed by about 11 million barrels. That I thought would give us a little bit more push to the upside. It's still finding a lot of resistance here on this Fibonacci extension and the 38 Fibonacci retracement. So all of those things in line. It's going to be a tough slog to get up into that 60 handle. It looks like we're going to have to need a real big kick in the pants. I thought that 11 million barrel miss would have been something that really push us higher, but it just kind of stalled out once we started getting close to those resistance areas that have shown to be a strong area of overhead resistance. So as you can see on the chart here, it's tested it several times, finally lost some momentum. Now with the data point of that big drawdown, we're trying to test it again. We need some serious bulls to come in to make this market move through those resistance areas and into that 60 handle. Now yesterday gold had a pretty bad day, and today it's continuing to have that bad day. I was looking at putting on a couple of trades yesterday. It got away from me. I was able to get into some GDXJ, which is the Junior Gold Miner ETF. I'll talk about that here in a little bit because I think that gold is just way overdone up into this 13 handle right now. And looks like the market's looking to test this value area high. If we start getting in there, it could precipitously fall back down into that 12 handle. But as you can see, there is price being accepted at these levels, and we could see it bouncing back and forth in and around here to build this out. That's still in line with my assumption with my trade. I'll talk about it. That's the beauty in selling premium. But then we got the bonds. They also had a really bad day yesterday. And you would have thought that when you see the gold falling out of bed, you see the bonds falling out of bed like that, that it would have been more of a flight to safe, a flight to quality, I should say, where people are pulling out of some of these safe haven assets and moving it into the equities. But the equities just didn't feel like they were getting that cash influx there, and it's starting to maybe look like some people are pulling out of some of these safe havens and even making it more of a safe haven by putting it into cash in a sense. So we'll have to see if that's really what's happening, but it feels like that right now. But bonds continuing to slide as interest rates are not looking like they are going to move anytime soon in my eyes. I don't think they're going to go up. This is indicating that the bonds are looking to increase interest rates as bond yields go up, prices go down. We've got prices going up or prices going down. That's indicating an upward trajectory in yield. So I think that that's a little crazy to think that, but it could be just trying to migrate back down and building this volume node inside of here. We've got the time volume and the price volume up here and the time volume down here. Both of those being, pretty strong points of control. But if we get a lot of volume building up and around here in time, it should all shift to that higher level. Now, something we do often see with this when you get these big splits is that the market will bounce between those two magnets, okay? So we've talked about this before. Points of control act as magnets for the markets. When they get overextended, they want to migrate back to those. Now, when you have two of these points of control, it has a tendency to bang back and forth in between those and build up some volume and time inside of the two, creating one big, large bell curve in a sense, okay? So that could be what we're starting to see here in bonds, and that would make a lot of sense, actually, because interest rates, in my eyes, aren't going anywhere anytime soon. So they can't really extend too far to the upside or extend too far to the downside because it'll just be arbitrage in a sense. All right. We've got the VIX again, still in the 15 handle, which is a good thing. It's moving slightly higher today as we are seeing the equities kind of struggle a little bit today. We've got the Dow Jones Industrial Average here. just, pretty 50 points in the Dow Jones is pretty unchanged. As a matter of fact, we are slightly in negative territory there at 51 points. Then we move over to the NASDAQ. We can take a look at the NASDAQ here and see it's in negative territory as well. For some reason, my Dow Jones wasn't showing it in red, which was giving me a little bit of confusion. I could see it was down on the day, but it was making it look like it was unchanged. So we have NASDAQ slightly lower on the day, but not really any real good setups here. All of these dojis are just very messy, to be quite honest. So it's very difficult to tell whether we're going to move higher here or lower based on the technical setups here, in my eyes. Yesterday it was looking pretty confirmed that we were going to start moving back down to the point of control in my eyes. But then that late day strength that we talk about, you see that late day strength, and that is very bullish. Today it's a little bit weaker, but again, we're still looking for that late day move to give us a discernible direction. It's not always as important to look at the late day move, but when you're getting this messy of a chart, that's going to be the indicator we're kind of really looking for here. But the E-mini S&P is slightly off on the day. We can look at the daily chart here on the E-mini S&Ps. These are 30-minute candles. Every candle, a 30-minute segment. Each blue section, this big blue section, is the full-on day with the night session included. But you can see when we were talking yesterday, we got this big sell-off, and then late in the day, basically as Trump and Un were setting up, gearing up for their talks, the market really started finding some strength in that heading into the close. That strength in the close was something that I said was very bullish, right? Well, today we got some bad economic data. We flushed out some of those overnight longs, and it's just really a messy pattern. We've got as much strength coming in one candle. We got that weakness coming in into the next candle, which is a major battle between the bulls and the bears. We haven't seen who has won. We haven't gotten any confirmation of that, right? And that's what I'm talking about with the messy chart setup, is that this battle of the bulls and the bears isn't really showing us any side is showing any weakness. So it makes it very difficult to kind of trade off of that, right? Giving a directional assumption when the bulls and bears are still fighting out and we can't get confirmation. So kind of on the sidelines with that, whether we're going to move higher or lower. But with GDXJ, this is the trade I was talking about. I was trying to get in yesterday. Probably could have gotten in at a better level, but I got tired of chasing it. It's moved down to the point of control, as you can see here. That's usually where I say when we get overextended and over to one side or the other, that when it migrates back to that point of control, it has a tendency to settle down in and around there, because that's where price has been accepted. That means if you're long at these levels or short at these levels, you aren't really in any hurry to cover those trades. So you're complacent, if you will. All right. So with that being said, I went into GDXJ. I was able to get in above, in a sense, selling the 35 handle in the April contract. So I went into the April with about 49 days to expiration. That's about as close to 35 days to expiration as I can get for the most part. And with the implied volatility percent above 30, that being good for an ETF to sell premium in, right? So it's above 30, it's right around 37, 38. I decided to go in there and look at those 35 calls in there and was able to sell those for 43 cents. That premium and the strike added together, remember you take the strike, which is that 35 strike, plus the premium, that gives me my break even at 35.50, or very close to it, 35.43, which is above this high. I thought the high was overextended anyway. Now that the market's starting to roll back over, hit that point of control, we could see volatility come out, and it settled down around this level. So my market assumption is bearish to neutral. I don't think it's going to go up there and make new highs. So I've gotten myself in the clear on that. So great setup as far as I'm concerned. I don't know that it is a perfect setup. It is great for the fact that I'm above a 52-week high that got really overextended above the value area. And now we've pulled back to the point of control. I think we're going to settle down or even continue to the downside, because I don't think that gold is in a place where people are really putting their money right now as a safe haven. So that being said, that's about all I've done today. I've looked at a couple of other trades, still sitting on the deer. It's at about 20% increase in profit. I'm looking for that at least 30 to 50% increase in profit, probably closer to that 30% because it was very close to already being achieved. So it's kind of gotten me leaning towards that at this point. And then today's webinar is going to be on the broken wing call butterfly. It's a great strategy for a IRA. If you have a directional assumption, you're able to collect some premium, get a really nice wide spread and large, pretty far out break evens. It's going to put us out to at least around a 1 standard deviation move, which is only about a 15% probability of happening. So I'll show you how to set that strategy up to increase your probabilities of success, and so you can sleep at night. So you're not guessing strike location, the premiums, and all of those things. I give you rules to set this up, and if it doesn't fit those rules, you know that there's another strategy out there that would be more appropriate for your assumption and the environment in and around that underlying. I show you how to set all of that stuff up, so it's very easy with quick, easy steps to follow. It's a checklist, if you will. So check that out at protraderstrategies.com. That's all I got for you guys. If you can't take that, take it easy.